additional leverage and ability to lead. And look, there's no doubt that there's connectivity between what we do at
White
home
House
and
Energy
what we do
Advisor
around the world.
Hochstein says that he
Strengthening
hasn't
democracy,
seen cost
strengthening our
rise amid Red
institutions,
Sea
and making
Houthi
sure that
attacks.
we have a healthy economy that is not just about based on an old-time scenario or vision of enriching 1 or 2% of the economy and that will promote the rest, but rather building out that middle class, creating a stronger economy that is focused on the future. That future that you're talking about is what gives us the strength. The Inflation Reduction Act, I can tell you, we're afraid of in the world, even in Lebanon, in the middle of a conflict, they talk about the Inflation Reduction Act and what the president is doing to strengthen the American economy.
Lastly, Amos, you've been very generous with your time. I want to ask you about the president's pause on LNG export approvals. I don't know if this is an issue he plans to address tonight. I suspect this might come up, but I wonder if it's possible this turns into a permanent moratorium.
I think what the president announced, or actually the Department of Energy announced, is a pause so that we can look at the factors. But we have to level set because there's been a lot of talk about this. The reality today is that we are the largest exporter of LNG in the world. And from that base in the market of being the largest, we will double our exports capacity between now and 2028. So what we're saying is that is not in question and that is not on pause. What is on pause is to say beyond that, beyond 2020, beyond 2030, do we need to look for a minute and say, with such exponential growth that we've seen, do we need to look at the economic impacts, on the market impacts, and do we have to look at what the environmental and climate impacts are on the communities that live along our Gulf Coast before we say we're going to give more permits? So do we even need more facilities is a good question to ask. I don't know the answer to that. There have been different projections of where demand is going to be. So I think his focus is going to continue to be tonight, tomorrow, for the next 5 years on accelerating the energy transition, but making sure we have the energy mix and the energy security for us and for our allies.
All right, Amos, thank you so much for joining us on this State of the Union Day. Amos Hochstein, Senior Advisor to the President for Energy and Investment. We appreciate you joining us on Bloomberg Television and Radio live from the White House. Now we want to get another voice into this conversation, and we're joined now by Jane Hall, American University Associate Professor of Journalism and Media Studies, also author of Politics in the Media, Intersections and New Directions. Jane, great to have you. There's been a lot of talk about how the president's speech tonight, while it will be about policy, it perhaps even more so will be about presentation, because this also is about the perception that at 81 years old, Joe Biden is too old for the job and shouldn't be elected to a second term for that reason. What really matters this evening?
I think it all matters. I think the subtext is he up to the job? And if he, God forbid, trips or seems to be moving slowly, that will be something that will be played by the Republicans and, frankly, conservative networks as well. So a moment for him is to simply be vigorous and deliver the speech well, maybe even mix it up a little bit, with some of the GOP. Yeah. If they shout at him, perhaps to remain statesmanlike, but also show that he can mix it up. They're talking about letting Biden be Biden, and I think one of the very interesting things in your speaker just now is that they are going to try, it would seem to me, to paint a picture that this is a person who has a vision for a second term, that you don't want Donald Trump for a second term, and the memory of a lot of people has faded. And so the international piece is very important. Obviously, I teach young people, I teach college students, they're very concerned about the deaths in Gaza. That is a place where he is losing a lot of voters. He is associated in a lot of young people's minds with one side of this conflict.
So shortly expecting the results from the Fed reverse repo.
To deal with the fact that he wants to say to people we have this tremendously strong economy when in fact people have not been feeling that. You know, people see it in inflation and he's being stuck with that. And so I think he probably needs to do what Bill Clinton was famous for, which is I feel your pain. We're working on this. But I also think he's got to show that he's on the side of working people, which has been something he's said many, many times. And somehow that message has gotten somewhat faded in the American mind. We could debate why that is, but to say this is what we did with the Inflation Reduction Act, probably many people don't know what they did.
Yeah, much of this is going to be reminding folks of what's been done, which brings us to the audience. Jane, you're a media expert. Is he talking to the people in the room at all tonight, or is this really about people in their living rooms? He's going to be looking all the way across all of those heads in the chamber to the cameras all the way in the back of the room to make eye contact with me sitting on my couch, right?
Absolutely. And, people, this is one of those collective events. People will be tuning in. This is
72 counterparties take 436.754 billion at Fed reverse repo operation.
Something drastic changes, that it's going to be Biden versus Trump. He is going to be playing to the audience at home, and he's also got to at least address the audience in the room. And I'll be interested to see how much does he go after the GOP? How much does he talk about how Trump, in many people's views, killed a bipartisan immigration bill? I don't think he's going to go too near immigration. I think he's probably going to be playing to an audience at home and saying, I feel your pain. I'm on your side. Remember me as the guy that was that and is that. That's where I think he's going to be trying to speak. But again, if there's a moment where he seems to falter, that is going to be a viral video. And so he's got to not have that happen. Regrettably, that would be picked up all over the place.
And Jane, we have less than a minute yet left, which actually ties into this question. Isn't this also in part about sound bites that are going to be replayed on TikTok and on social media perpetually? This isn't about the speech in its entirety, right?
Oh, absolutely. It's what the pundits, it's what you and we and everybody else on networks that have different opinions, cable news being huge about this. If he makes a mistake, that'll be picked up by people who don't like him and don't want him to win. TikTok is very important. Again, I know that from my students. And they're, getting out there with those bites that work to different audiences is partially going to be in the hands of this very fractured media environment we're in right now.
That's very true. All right, Jane Hall of American University, thank you so much for joining us. The young voters and the TikTok generation, perhaps they're one and the same. We'll have more coming up on Bloomberg TV and radio.
Jobs Day, and Bloomberg has the report under surveillance.
We've had unemployment sat at 4% for 2 consecutive years.
This is a two-sided sword.
There is a softening in labor demand.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is a very strong labor market.
The White House has got to love this.
This is something huge they want to run on.
Where is the slowdown?
If you look at the reality, it ain't showing that.
The February Jobs Report, Friday on Bloomberg. The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do.
that brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
It's 121 on Wall Street with your check markets all day long here at Bloomberg. We are looking at records for the U.S. stock market right now. The S&P number to beat is 5137. Right now we've got the S&P 500 index trading at 5154, up just about 50 points, higher by about 1% right now. The Dow Jones Industrial Average up 155 points, up 0.4%. The NASDAQ Composite Index up almost 1.5%, higher now by 232 points. And the Russell 2000 Index of small cap shares up 0.9%. But to be sure, we do have the S&P right now holding at a record. We've got the 10-year at 4.11%, the 2-year 4.52%. Spot gold up 0.5%, 21.57 the ounce. West Texas Intermediate crude oil higher, little changed, up just under 0.1%. WTI 79.19 a barrel, and Bitcoin up 1.8%, 67,676 right now on Bitcoin. Victoria's Secret shares are plunging, down now by 30.1% after the beleaguered lingerie maker's full-year sales guidance fell short of analysts' expectations. Right now, Victoria's Secret down by 30%. So again, recapping here, the key takeaway at this hour, S&P holding at a record, up now by 49 points, up by 1%. Balance of power continues. Back we go to Washington, and once again, Joe Matthew and Kayla Limes.
All right, Charlie, we thank you. I appreciate your being with us on the fastest show in politics here on Bloomberg Radio and TV. It's State of the Union Day. And Kaylee, I've been making the point all day. When we get bogged down in the division and the horribleness of politics in America right now, we can sometimes forget some of the wonderful things that take place in politics and in Washington. This would be one of them. It's like Oscar night in town. And I know people will probably be yelling and screaming by the time it's over.
Surely.
But the pomp and the history that surrounds this event is one of the wonderful things that we get to do every year.
Absolutely. I mean, think of all of the iconic images of State of the Union's past when you have the Speaker of the House behind one shoulder, the Vice President behind the other shoulder of the President. I think we all remember pretty well during the Trump years, some of the things Speaker Nancy Pelosi did during and after the State of the Union.
I don't think we're ripping up any scripts.
I don't know if we'll rip up any scripts tonight. Of course, this will be the first time that House Speaker Mike Johnson has a chance to appear in this capacity.
That's true. He'll be over one shoulder and Kamala Harris the other. And with us for the duration, Kaylee's going to be here at the desk in our bureau, along with Rick Davis and Jeannie Shanzano. I'll be joining from Capitol Hill, and our signature panel is with us right now. Jeannie, this is a big night. Mr. Speaker, Joe Biden will come down the aisle, hugs and handshakes. At some point, the applause will die down, and then the real stuff begins. How much of a coliseum is he stepping into tonight?
It is a huge night. And, you know, I was just looking back. Who
in the modern American, political landscape, has sat through more states of the union than Joe Biden. And, he gets to Congress in 1973. He leaves the White House in 2017.
Fed's says a couple more inflation reports could give confidence on inflation.
So nobody should be better prepared to do their final State of the Union for the first term than Joe Biden, having sat through so many. So, he defied expectations last year. The big question is, does he do that again tonight? I think he does have things to talk about. Number one, in my mind, is the economy.
Fed's says the Fed is likely in a position later this year to cut rates.
And I would talk about those good numbers that the Wall Street Journal poll told about the economy. And I would not use the term inflation. I would talk about cost of living, and I would blame corporations for driving up these costs.
says he expects economy to remain pretty solid.
In other words, Joe Biden on the side of the middle and working class.
Well, to Jeannie's point, Rick, this may be one of 50 some odd State of the Unions that President Biden will have been a part of. But this one is also different because this is also a speech that he is giving after the general election has effectively begun. Is this about the State of the Union or the state of the re-election campaign?
Mester says the Fed's goal is to ensure inflation ebbs while job market stays healthy.
This is a campaign speech, regardless of what the formal requirement or opportunity it is for the president to declare the state of the nation in front of Congress and the Supreme Court. Well, that's nice. That's, as Joe said, a great tradition that we love here in Washington, D.C. But he will have the largest number of people listening to him since his presidency started. This is going to be an incredibly important State of the Union compared to the previous three. And what he's going
Keep in mind, Fed's is currently speaking on CNBC.
That, he believes in Americans' greatness. He believes that we've pulled ourselves together after COVID and created an engine of economic reform, that we have more influence in the world than we've ever had, that the future is bright. Because when I look at all the numbers that tend to, give Biden and his campaign problems, it's the direction of the country. People believe what Donald Trump is selling, which is our country is in decline and our presence in the world is less influential than it used to be. And we just need to hunker down and pay attention to our own people and let the rest of the world take care of itself. And that is a stark contrast to what Joe Biden needs to sell tonight. But he has to explain why those things are important. Why is it important to be the leader of the world? Why is it important that we have a strong economy at home to project power abroad? Why is it important that we stand up to our enemies and adversaries around the world? I think this needs to be more of a storytelling session than an iteration of his accomplishments in office and how many lobbyists got what into the speech, for tonight. I think he has to change it up a little bit.
Pieces are in place for some storytelling. When you look at the guest list, Jeannie, much has been made about those who did not accept the First Lady of Ukraine and the widow of Alexei Navalny. But Joe Biden's going to point up to that box, and he's going to call out Latoria Beasley, a woman from Alabama who was awaiting an embryo transfer as part of her in vitro fertilization treatment when her procedure was canceled due to the state Supreme Court's ruling. Sean Fain is going to be asked to stand up, the head of the UAW. The Swedish Prime Minister will be there. Jeannie, what do you think of this lineup and the contours of the speech?
Mester says the Fed wants to bring rates into neutral stance over time.
It's incredibly important, and I'm so glad you raised the woman from Alabama. We can add to that Katie Cox, who was unable to get an abortion when she needed one for medical reasons, famously in Texas, and had to leave the state. That is all going to be part of a really important theme in this speech, which is to juxtapose what is going to happen.
Fed's Mester says it could be that we have higher neutral funds rate.
Over to the MAGA Republican Party of today, which is the president is going to make the case that you can bet we are going to be looking at a federal law banning the right to choose. I mean, just take a glimpse at who the Republicans nominated for the governor of North Carolina just Tuesday. Somebody who famously says there should be no right to choose and there should be no grounds for exceptions to that right. Look at Alabama, look at Texas. So he's going to use the issue of reproductive rights. We know that. He should use the issue of NATO, really importantly, the idea that we have a representatives from Sweden there. You know, if you go back a few years, nobody would
Fed's
think
master
that
says, I
Sweden
don't see a
would
big
be
boost to
joining
activity when the Fed
NATO,
starts
and yet
cutting
they are
rates.
the 32nd country to join because of what Russia has done, and the House needs to, specifically the GOP, fund the Ukraine war. Most Republicans want to. They've been held up by this recalcitrant end. So he's got a lot of those themes, and those guests are going to play right into them. I'm glad Sean Fain is going to be there. I think he has done something incredible with the labor movement, the UAW strike, the president first to go out there and to join a line and strike, and got the endorsement. Sean Fain, somebody he needs there. Maybe he helps pull some of his members over. So the lineup of guests is critical. Of course, wish the Ukrainian First Lady and, of course, Navalny's widow were going to be there. But, of course, there's very good reasons they are not attending.
Well, as Jeannie talks about the issue of Ukraine, funding for which still has not passed in the
Fed's
House,
master says we will
Rick,
probably move rates down in a gradual
about how
way.
this is a campaign speech that the president is making to the American people. He is also there physically in the room with the entirety of Congress. How much does he need to use this as an opportunity to make his case, not just for that supplemental emergency funding for allies, but also for a border deal that the House has refused to take up?
Yeah, I think outside of talking about the strength of the economy,
Fed's master says we are not very concerned rate cuts will fuel inflation.
Is the porous southern border. It is now the glaring defect in his administration, especially anything related to domestic policy. This shines above. And we see in the public polling that it is emerging as the number one issue in many states across the country that voters are concerned about going into the election year. So I think he has to be very direct. We have talked ever since the Republicans failed to pass the more comprehensive reform as part of the supplemental, that this was an opportunity for Joe Biden to pounce on. And nothing has been done. He goes down to the border. He doesn't say anything about a new policy or get tough. This is his chance. I know that the Biden people I've talked to, the supporters he has around states, are desperate for some signal of strength coming from this administration that gives them a talking point on the border different than what they had going into the speech tonight. Question is, does he deliver?
We've got less than a minute here. Jeannie, we heard from the Chief of Staff, Jeff Zients, talk about raising the bar. You're going to see a very energized president, he said. This is a big moment, and this president rises to those big moments. Is the White House making this more difficult than he needs to do? What, is he going to swing in on a rope?
Gosh, wouldn't that be something? We will be there to watch. You know, I think they are making the point that he is vigorous, and we are going to see the real Joe Biden out there, as we did last year. I think they are hoping that happens. But as your previous guest was just talking about, there is a danger to that, because these things will go viral if he does have a slip up. So these are high stakes for the Biden team tonight. But again, nobody more experienced to do this tonight than Joe Biden.
All right, Jeannie Shanzano and Rick Davis, our signature Bloomberg political panel, Bloomberg Politics contributors, who will be joining us for our special State of the Union coverage this evening. Thank you for joining this hour, and looking forward to seeing you later on tonight. It's going to be another long one, but we're here for you on Bloomberg TV and radio. 8:30 p.m. Eastern Time is when that will begin, Joe.
You said it. I'll be there. You'll be here. Rick and Jeannie on board, which is really, this is the team you want to be with, walking up to the speech and deciphering everything that the president said, as Kaylee mentioned. 8:30 p.m. Washington time. We'll see you on Bloomberg TV and radio. Let's get you up to date on world and national news now. Amy Morris has that in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. Sweden has formally joined NATO. The membership was held up by objections from Turkey and Hungary, but Turkey ratified Sweden's admission earlier this year. Hungary did so this week. Fed Reserve Chair Jay Powell, suggested the central bank is getting close to the confidence it needs to start lowering interest rates.
We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
Powell's remarks add some additional color about officials' thinking around the timing of the first rate cut. President Biden set to propose increasing the minimum tax rate paid by major corporations to 21%, eliminating breaks for companies with high-paid executives. Gallup editor-in-chief Muhammad Yunus says tonight's speech, the State of the Union, is his chance to turn his numbers around.
This is probably the most important speech he's going to give the American people. President Biden right now is historically behind every single president except President Carter on 5 to 6 of the most critical metrics that we've relied on historically to gauge how strong a president's position is going into re-election.
Our coverage starts at 8:30. Global news 24 hours a day whenever you want it with Bloomberg News Now.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
Do you see a future for Monumental as a public company?
Yeah, I think so. I think what we found is the leagues have opened up to new pools of capital. Over the last year or two, both the NBA and NHL have allowed professional investors to come in, not as individual owners, but as funds. So that's a whole new pool of capital that didn't exist before. Sort of shows a whole new asset class opening up for professional sports, not just teams, but professional sports enterprises.
I think the sophisticated analysts will be looking at this industry, and as our revenues start to get in the billions of dollars, yeah, I think that you'll see a wave of companies go public. Whether we will or not, there's a big responsibility when you're a public company. And I tell people, we're a public company already. The scrutiny that you're under in running a sports team is, I think, much higher than a public company CEO has to live with. We'd be prepared to do it. Just the market would have to be right. We'd have to emotionally be ready to do something like that. But I think Monumental will be one of the 3, 4, 5 best-in-class organizations that if that time was there, sure, we could go public.
Next time on The Deal.
I realized a long time ago that being a football player or an athlete, you can get into a room, but once you get in the room, you have to prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
This week, Bloomberg brings you the latest from China's annual National People's Congress, including China's budget plans, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg. Context changes everything. Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Do want to begin with a headline from the Bloomberg Professional Service. Rivian is pausing plans for a new EV factory in Georgia. Rivian shares are surging right now by 14.5%. Again, Rivian just getting word they are pausing plans for a new electric vehicle factory in Georgia. Rivian shares surging now by 15.1%. Stocks higher across the board. We are looking at the best level of the day right now on the S&P 500 index. Also looking at a record right now on the S&P 51.58, higher now by 1%. The old closing high 51.37. Stocks are advancing with the S&P pushing higher again by 1%. The Dow up 156 now, up 0.4%. Tech stocks the outperformer with NASDAQ up now by 1.6%. The NASDAQ 100 index doing a little bit better, up now by 1.7%. 10-year yield 4.11%. The 2-year 4.52%. Spot gold right now up 0.4%. 21.57 the ounce. Crude turning negative, down 0.3%. West Texas Intermediate crude 78.86 a barrel, and Bitcoin today up 1.6%. 67,554 on Bitcoin. Now let's head back to Balance of Power and Joe Matthew and Kaylee Lyons.
Bloomberg's Charlie Pellet with a look at the markets on this Thursday. Thank you so much. But of course, it isn't just any ordinary Thursday here on Bloomberg TV and radio live from Washington. It is the Thursday on which here in Washington, President Biden will be delivering his State of the Union address. And this was the subject of today's Wall Street Week Daily with David Weston as he sat down with Lord Mark Malloch Brown, who is the Open Society Foundation's president, and started by asking him what he would like to hear in tonight's speech. Take a listen.
I think what we won't hear is very much, so I'd like to hear more. But I think a year ago, he had a great foreign policy record. He was standing up to Russia in Ukraine. He'd reversed the setback of the Afghan withdrawal. He looked as though he was really rebuilding a powerful transatlantic relationship. This year it looks a lot messier. Ukraine is stalled. There is a horrible setback with the sort of Israel-Gaza situation and showing up in these large numbers of uncommitted voters in some of the primaries. So I expect there'll be quite a lot of silence on foreign policy, but a rather eloquent silence and for its omission. What would I like to hear, though, is, you know, an attempt to relaunch the kind of international rules-based order. This is what has given America 3/4 of a century of prosperity since the Second World War. But there's a real sense, I think, amongst many Americans and certainly amongst people around the rest of the world that it's running out of room, that it's deteriorating, that there are too many double standards around the international order, and that most countries, including the United States, are very selective in their respect for the rules and principles of that order. So, you know, we seem to be moving towards a much more chaotic and difficult world.
There's a lot of talk about that international rules-based order and the shape it is in. A lot of people don't think it's very good. But you suggest a couple of different possibilities for that. When it was created after World War II, the United States really was far and away the leader economically, militarily. That disparity has come narrower over time. How much of the erosion of the international rules-based order is just because the United States is not as towering as it was before? How much is because of some of the inconsistencies, the double double standard that you referred to?
Yeah. Well, I think in part there is a sort of, the United States, when it stood tall really as the only last standing superpower, was able to, impose that order, even then, frankly, somewhat selectively. But nevertheless, it was the world's policeman. And that role has clearly declined. And, you can choose your date, and some may go all the way back to Vietnam. But I think the forever wars of Iraq and Afghanistan are probably a more realistic turning point, at the same time as you've seen this massive redistribution of global GDP. The United States still is the strongest economy in the world, but it's got a new generation of rivals, China, India, others, racing up in its rearview mirror. And these two facts together, a deterioration of United States military dominance and of its economic leadership, are combining to create a much more multipolar world.
That suggests we can't go back to where we were. Even if we wanted to, we couldn't go back to it, just because the facts on the ground have changed. What is a new role that could evolve for the United States and for its partners around the world that could reestablish some form of international rules-based order?
Well, at its best, the United States is still, the sort of high priest in a way of the values of an open, liberal democracy. It's what this nation was founded on, and it was a great exporter of it in many years after, throughout the 20th century, frankly. And, there is a chance possibly to recover that sort of moral high ground, but it would have to lack some of the sort of selectivity of the past. It would have to have a universality which, frankly, was not always there, even in the
Hamas official says during ceasefire negotiations, Israel prioritized its captives issues while refusing conditions set by Palestinian factions. This is according to Xinhua, which is a Chinese state media.
On foreign policy, a few common enemies for Republicans and Democrats alike, notably China, but otherwise, a American foreign policy which veers in quite dramatic, unpredictable ways, and certainly doesn't seem to have a consistency of principle at its core.
Here at Bloomberg, we do a lot of talk about investing and markets. And typically, investors are loath to try to discount for geopolitics. It's so hard to do. At the same time, geopolitics plays such a role today, unlike any time it has in the recent past, at least. What does everything you're saying mean for an investor? How do they take that into account as they make their decisions?
Well, I think it really is a reversal of the world that most investors grew up in, where economics drove geopolitics. It's now a situation where geopolitics drives economics, and therefore, it is absolutely critical to any boardroom strategic decision about investment. We're clearly seeing, issues of resilience and spreading risk, shaping supply chains in a way that has not happened before. It's no longer just about cost, it's about risk. And, in a very real way, the world economy is getting restructured along geopolitical lines. Now, people often jump from that to say it's less global. That's not the case. Global trade continues to grow, but it's growing within this new paradigm of a kind of competitive world rather than a collaborative world.
We have the State of the Union address against the backdrop of a presidential election this year, of course. And it looks very likely the two candidates will be the present president, President Biden, and the former president, President Trump. I wonder, from your point of view, how much difference does it make? Because there are some who suggest there are some commonalities, particularly in international affairs. You mentioned China. A lot of people think they're not that far apart, for example, in China. On some of the trade usage to protect jobs in the United States may not be that far apart. As viewed from outside the United States, is there a big difference between these two policies?
I think on China and trade, you're right, David. There's a lot more coincidence than either side are probably willing to acknowledge. But on a range of other issues, not so. And probably most notably the transatlantic relationship, where there was a huge collective sigh of relief when Trump was defeated by Biden, and now equal, if not greater, alarm at the risk to NATO of his return. But I think, in a way, what really alarms people about Trump is, rather than the sort of classic transatlanticism and predictability that came with a Biden, or comes with a Biden, is the unpredictability that comes with Trump.
Mark Malloch-Brown, the president of the Open Society Foundation, speaking with our colleague David Weston earlier in New York as we look ahead to the State of the Union address. That's tonight. The stage is set. We'll be talking more about it throughout the day here with special coverage as well, beginning at 8:30 p.m. Washington time here on Bloomberg TV and radio. Join Kaylee Lyons, myself, and our signature panel. Rick and Jeannie will be with us to walk through the speech and bring analysis. Following that, we'll also have, of course, the official Republican response as part of our coverage later on. Saleha Mosen drops by next, the host of the Big Take DC podcast, as we turn to Trump's legal woes. This is Bloomberg.
Now, women on average have about a 30% lower, I guess, amount of money saved up for retirement compared to men.
Yes.
So what are you doing about that?
Yeah, so we launched a campaign called Retire Inequality. And we do know that women retire with 30% less. Women make 83 cents on the dollar. And so there's a couple of things that we're doing. One, it's having this conversation and making sure that we all are aware that there is a gap. By the way, women live longer than men, so longevity risk is a real factor. Secondly, it's about making sure that we are talking to women about what can you do differently. And so whether that's negotiating pay and what are some tools that are out there, making sure that you take the time to negotiate, because we know women do not negotiate as much as men, which puts you at a disadvantage to start. But then also along the way, making sure that women are securing their own retirement, and that as part of their retirement plan, we're having much more conversation around guaranteed income as well. And so ensuring that we understand what are the nuances for women. If you think about COVID, 2 million women exited the workforce. They did not continue to contribute to their 401k or 403b plan. And so how do we make sure, as a matter of policy, as a matter of engagement, that women can have an opportunity to catch up, that women can understand that if you exited the workforce and now you're back, that that's 2 years of compounding that you were not able to take advantage of? And how do we continue to make sure that we're educating them and giving the tools that they need to get back on track?
Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything. You're listening to Balance of Power with Joe Matthew and Kaylee Lyons on Bloomberg Radio and Television.
On this State of the Union Day, we welcome you to the fastest show in politics. I'm Joe Matthew in Washington, alongside Kaylee Lyons ahead of our special coverage later. We're also going to, of course, have the late edition of Balance of Power at 5 p.m. Eastern Time. Kaylee, we're giving everybody an opportunity to get ready here, pop the corn, and decipher what's going to happen tonight. You've made the point pretty eloquently that we've got two jobs here, and when I say we, I mean him, Joe Biden. Yes, it's the State of the Union, and he's the President of the United States. I don't know if he'll say the State of the Union is strong. That'll be something interesting tonight, how he couches that phrase.
Sure.
But he's running for re-election, and this is officially candidate Joe Biden who's going to be speaking as well tonight.
Absolutely, and he'll be speaking to one of the largest audiences. He's going to be
Seeing from sources that Senate Democrats urged the administration to hike tariffs on the Chinese EVs.
The Democratic convention will have another opportunity to give a high-profile speech, but certainly this is one of just a few chances he's going to get this campaign cycle to reach an audience this big. And of course, as we've been hearing over the course of the last week when asking people what their expectations are for the speech, that it is about contrasting with his predecessor, but also a likely opponent in November, Donald Trump. And on the subject of Donald Trump, that's something that's discussed in this week's Big Take DC podcast. The host of that podcast, Saleha Mohsin, Bloomberg senior Washington correspondent, is joining us now. And Saleha, in this week's episode, you're looking specifically at Trump's legal troubles. This is a financial consideration, as well as he is simultaneously trying to pay defense attorneys and legal fees and finance an active presidential campaign.
Kaylee, we're looking at the legal angle, the campaign finance angle, and the angle of electability. Will he still get votes? And the exciting thing about this episode is we leveraged a group of our reporters called the Road Warriors, who hit the campaign trails. They attend Trump rallies. They've hit all of the other GOP primary candidates. They attend Biden events. And I have tape. You will hear on this episode voters, the voices of voters that are part of Trump's base. And we ask them, you hear the reporter ask the question, will you vote for Trump if he is jailed, convicted? And we got a lot of yes answers. We got a lot of enthusiasm that, if he's jailed, I still think I want him as president. They have this Trump nostalgia for that era of his presidency.
We've talked to a lot of voters as well, Trump supporters, who told us the exact same thing in Iowa, in New Hampshire, in South Carolina. We certainly, I think we can underscore that in Super Tuesday states, I should say, with that same sentiment. Our polling, though, would suggest that people might feel differently with a conviction. If this actually goes that far, if their $25 payment did not help him win, will they still pull the lever for a convicted felon?
And that's the interesting thing, Joe, right? Like when we look at polling and the voices that we have on the podcast this week, we're talking about how people feel right now. This is not necessarily exactly how they're going to vote in November. And it's hard to really absorb the depth of what that means, because we all think, whether you're going to vote or not. Might as well have the election now. A lot of things happen. A lot of things unfold. When you get to a polling booth and you see the American flag everywhere, you go, it's this official document. You showed your driver's license to go sign up. You mail your ballot. It's a moment. You don't always know necessarily how people are going to vote.
And for our audience that's watching on television, and I'll describe the footage to our radio listeners, we were just looking at Trump with his golden sneakers that he's now shilling, and as an attempt to raise money. Just to go back to the financing part of this, we know that President Biden has a massive war chest to deploy over the next 8 months for this incredibly long general election. How much is Donald Trump going to need to be pulling in, and frankly, from who? If he's keeping the pace of legal expenditures as we've seen over the last several months, and then also trying to do the ad buys, trying to finance all of the typical things that would come with a presidential campaign.
It's a lot. He is dealing with 4 federal trials that amount to 91 felony counts. There are 3 civil cases. One has been settled, but they're all sort of being appealed. They're all open. He has a lot of legal fees. He also needs to put almost $500 million into escrow.
Right, for one
He's
of those
going to
civil
appeal
cases.
or delay, but he needs to put that in his liquid assets. He himself has said they're around $600 million. So he'll tap all of that. Now, he is valued by the Bloomberg Billionaires Index as having assets worth $3 billion. He would have to sell a lot of his real estate and other holdings in order to tap into that. he can use campaign funds he can't use it for any of the cases where he's being tried as a private citizen. Any of the so E. Jean Carroll.
Right, those civil cases.
Those civil cases. But when it comes to the January 6th case and a couple of the other ones, he can actually tap those. And, we're going to find out tomorrow. The Republican National Committee is meeting. He has endorsed his daughter-in-law, Lara Trump, to be the chair. And she has said, if I'm chair, I'm going to direct funds so that he can finance some of his legal issues.
She's the host of the Big Take DC podcast. Saleha, thank you. Saleha Mohsen with us. Find the podcast, as you will all of Bloomberg's podcasts, on Apple, Spotify, wherever you do that stuff. Subscribe, and you'll hear exactly the words that Saleha is talking about from voters here in the campaign cycle. Kaylee, it's time to pass the baton to New York. Carol and Tim are standing by for Bloomberg Business Week. Hey, Carol, you can't avoid Washington today. Jay Powell's talking. You guys are listening.
We are indeed day 2, but I feel like I said to Tim a little bit, I'm feeling a little bit of a Fed fatigue. Like, okay, got the message, let's move on.
How do you think Jay Powell's feeling after 2 days of being grilled by lawmakers?
Scotch tonight?
Yeah.
Doubleheader? I don't know.
Not envious.
No.
Not envious.
Yeah.
I feel like he had some zen this time, though. He's relaxed.
It takes
he
a lot
feels
of
like he's turned the corner. Maybe it's just me.
Maybe it was Scotch last night. We do have stocks at a record, though,
Yeah.
guys, hitting all-time highs again. So, off and running. Rate cuts.
I love it.
When is it going to happen?
That's the conversation coming up straight ahead with Carol and Tim, our colleagues in New York. Kaylee, we've got a big night ahead. I'll meet you at 5 o'clock. Bloomberg Business Week starts now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live on Bloomberg Radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week on this Thursday, March 7th, 2024. Carol Masser along with Tim Stenevec. Got to say, thank you, central bankers, because, Tim, the prospect of rate cuts around the globe, sending U.S. stocks at least to all-time highs.
Yeah, S&P 500 up by more than 1.1%. The NASDAQ 100, Carol, up by 1.7%. The SOX at a record high, NVIDIA at a record high.
Thank you, semiconductors,
Yeah,
again.
Yeah, again.
All right, this as Broadcom gets ready to report after the closing bell. All right, everybody, we're going to talk a little bit more about what Jay Powell had to say day 2 as he was up on Capitol Hill. Message rate reductions can and will begin this year. So we're going to talk with our own Mike McKee, who's been following it word by word, and also get into some of today's economic data.
Okay, also not so bad for a day's work, okay? Former Secretary of the Treasury, Steve Mnuchin, and team scoring an instant profit as they take control of the ailing lender, New York Community Bank. We're going to have the latest on that.
We are indeed. That's a most read story. So too is the tale of how Apple sank about $1 billion a year into a car it never, ever built. Great behind-the-scenes storytelling by our own Mark Gurman, so we're going to dig into the details of that one. It's a great read.
Also, we travel to the luxury real estate scene.
We do?
We're going to stay here, but South Florida, the luxury real estate market there. We're going to get an update from on the ground where there's several very, very expensive condos for sale, Carol, if you're interested.
Yeah, bottom line, we can't afford it. First up, though, someone who does travel around a lot is our own Charlie Pellet. He's got a check on the day's trade and your top business stories. Hey, Charlie.
Hi, thank you very much. Good afternoon to you both. Focused on the state of the markets right now with the Dow, the S&P, NASDAQ all pushing higher. And right now we are looking at a record just off session highs, but a record nonetheless on the S&P 500 index. We're up 58 right now, up 1.1%. The number to beat for another record on the S&P would be 5137. Right now we are at 5163. The Dow up 208, now up 0.5%. NASDAQ up 271, up 1.7%. 10-year yield 4.10% with a 2-year now yielding 4.52%. Gold up 0.4%, 21.57 the ounce, and West Texas Intermediate crude down 0.2%, 78.98 a barrel on WTI. Bitcoin up 2.1%, 67,858 right now on Bitcoin. Shares of the supermarket chain Kroger surging
NASDAQ
after
hits
the
a fresh
grocer's
intraday
full-year
record
adjusted
high, last
profit
up
outlook beat analyst
1.7%.
expectations, making it the latest retailer to offer an upbeat outlook as customers show resilience. Kroger shares, they are advancing. We've got Kroger up now by 9.34%. Broadcom reports after the closing bell. Again, recapping stocks higher. S&P up 60 right now, up 1.2%. And that is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. Well, Fed Chair Jay Powell, as you know, back up on Capitol Hill, day 2 of his semi-annual testimony before U.S. lawmakers, did say the Fed not far from the confidence needed to cut rates and that rate reductions can and will begin this year, while noting policymakers are well aware of the risks of cutting too late, Tim.
In the meantime, another set of data points here in the U.S. today, including weekly jobless claims remaining below pre-pandemic levels for a 4th week. So we have back with us to tie everything together, international economics and policy correspondent Michael McKee. He's here in our Bloomberg studio at headquarters in New York. Mike, you were in D.C. yesterday. You're back here today for day 2 of testimony. How would you characterize the differences between what we saw from the House yesterday and what we saw from the Senate today?
It wasn't much of a difference. Senators moved faster. There are fewer from on the committee, so the hearing didn't last as long. But the questioning was pretty much the same thing. They did spend a little bit more time on what it would take to cut interest rates, and there were some protests from a couple of senators about interest rates hurting home buying and the consumers in general, and the Fed should lower interest rates. But then they spent a lot of time on banking again, and the Basel III regulations the Fed is considering. That got a lot of attention from the senators. There's a little bit on the balance sheet, but it was pretty much the same as yesterday, and certainly Jay Powell didn't break any new ground. He sounded maybe a tiny bit, a couple of basis points more dovish, which is, you saw basically.
It's like when you have 2 kids, right? You bring the first one home, you're nuts, you're obsessed, you stare at them constantly, and you bring home the second kid. So I hear, I only have one. But you bring home the second one, you like put him in the bassinet, and you're like, go and do a load of laundry.
I could loan you one.
No, one is enough. But you know what I mean? It feels like a lot more relaxed, and we kind of know what we're going to probably get.
I mean, the market added a little bit of a possibility of a May cut and a June cut today, but it didn't really move the needle on things, and I don't think people expected it to.
Yeah.
Why do you think there was that movement in the May cut then, the idea of a May cut?
Oh, people are always just adjusting one way or another, and we had an ECB decision today and a Christine Lagarde press conference, and they changed their forecasts for things, so there was a lot of movement in the markets right after they did that, and so that probably feeds into it too, as people are adjusting their positions on relative interest rates, but this falls into what we saw today falls into the category of noise.
You know, we always kind of push with you, Mike, kind of the data today that we got, weekly jobless, and just the data backdrop. I mean, does it kind of continue to come in the same, showing strength? But I don't know, are we seeing any signs of kind of things slowing down? It feels like it supports the strong story that continues to be out there.
What people were talking about in Washington yesterday, and I've talked to other Fed folks over the last couple of days, is that the data are kind of frustrating in the sense that they feel the risks are kind of balanced right now between growth picking up or growth falling off. And the data don't give them any clear direction. Some of it's a little weak, like the ISM. Some of it's a little stronger, like the jobless claims. And so they don't have a good signal here, which just kind of reinforces the idea that you want to wait and get more data, which is where Jay Powell was over the last 2 days. Is we're close, but we need
more data.
We need to
like inflation next week.
Believe it. Something.
Well, okay. Well, speaking of more data, tomorrow, February jobs, 200,000 is what economists surveyed by Bloomberg are expecting. It was a blowout number for January. And the next week, CPI. Which one's more important?
CPI, because the Fed is focused on inflation. Jobs report, if it came in at 200,000, everybody's going to go, oh, this is a lot weaker than last time. But it was that January was extraordinarily strong. It'll be interesting to see if that's revised down at all. 200,000 is stronger than we had seen in the fall going into December, January. So it's not a weak number at all. The Fed would like to see something around 100,000 a month that would suggest to them that things have slowed down and wages aren't going to keep rising. So 200,000 will be pretty strong. But it's CPI that they care about. It's inflation they care about, and they'll get more clues to that next week. And we'll be seeing if the stronger inflation we saw last month continues, and that's what they're concerned about.
Tomorrow's report, we just kind of walked through it. Is it just a big drop or big gain that would make people start to rethink things? And I know it's a 1-month report, and we always say that, but I'm just saying if it varies significantly from the forecasts to the upside or downside.
That could lead to a recalibration. You have to be careful with that, because right now we're not expecting anything in March, so we're not talking about anything until May 1st. So you're projecting out a lot. But yes, if they got well over 200,000 or well under 200,000, then people are going to be looking at that as saying maybe we've reached some sort of inflection point where the economy is now going to get stronger, or it's going to get weaker, and that'll change our thinking about the Fed.
One last question. The last couple of days we talked about, you noted both times how much was spent on, banking rules and requirements, if you will. We talked Basel III and so on and so forth, versus really kind of the economy. Not normal, right? Or what, this semi-annual testimony, this environment.
Well, it's in this environment, and the fact that the Fed talks a lot, people have a pretty good idea what they're thinking, and the data haven't been pushing one way or another.
Right.
So I don't think even the members of Congress were confused and asking Jay Powell to straighten them out on monetary policy. But the banking issues are a big issue, especially to the banks in all these congressmen and senators' districts.
Right.
And the banks have been lobbying their legislators very hard on this, and it obviously got through. There was a thought going into these hearings that Republicans would be really pushing Powell to back off of this, but a lot of Democrats were as well.
So there is agreement across the aisle on some things in Washington.
there is bipartisan agreement, and then there's Elizabeth Warren, who lambasted Jay Powell for even thinking about changing the regulation.
There's some interesting parts of the testimony. It's a family show, so we can't go into it, but nonetheless, it was an interesting day.
It was a very interesting
day.
Testimony, yeah.
All right, Michael McKee, our international economics and policy correspondent. Thanks so much. All right, so let's go, Mike, finishing off on banking. And, New York Community Bank Corp, Tim, continues to be on our radar because it's soaring again. And there's a great story. It's a most read story in the Bloomberg, really giving us some insight into the deal and kind of the instant paper profit that these individuals are making.
Yeah, we're talking about individuals such as U.S. Treasury Secretary Steve Mnuchin, who, along with his Liberty Strategic Capital, led a group of investors that injected more than $1 billion into New York Community Bank. And this could only be the beginning. With more on the Mnuchin playbook and what is a most read story on the Bloomberg, with us is Bloomberg's Catherine Doherty, finance reporter at Bloomberg News here in our studio. So Catherine, it was interesting as this all played out yesterday. Carol and I were on air, and the stock was halted multiple times. But one thing that we did notice after our Bloomberg News team broke the story was that by the time it started trading again, it was above the price of $2, which is the price where Mnuchin and team were able to buy in at.
That's right. They've already minted quite a profit.
On paper, at least.
On paper, but it looks like it's holding out today. So it's been 24 hours or so, or as we're getting to that point. So it's not to say that this is a forever proven strategy. They're going to have a lot of work to do. It's not just the investment and the number, but it's actually how do you turn this ship around, and how do you get your heads together and bring in the best of the best to make sure that this bank has a future. But the share price is reflecting investors' sentiment, a positive sentiment, and their belief that these leaders, and it's not just about the money, it's the people that are behind it, that presumably the bet is that they will succeed in turning the ship around.
Let's talk about that and the Mnuchin, Steve Mnuchin playbook, because this is what's interesting. And this was some of what we were getting yesterday, that these are people who are respected investors, kind of know how to deal with this kind of situation. What's the playbook? And let's kind of maybe go backwards, right, to IndyMac, because he's kind of bringing the gang back together, it seems.
So back in 2008, IndyMac, which eventually turned into West Bank, I believe was the name. And Joseph Otting was the CEO of One West, of that firm. But today, again, bringing the band back together, Otting is the CEO of NYCB now, and clearly this is the relationships that have been built in the past, the trust and the knowledge that these leaders have gained in not just finance but in banking, which is a very specific industry to have some of these very strategic plans that they're going to need to set forth in terms of how to diversify the bank, how to deal with the existing problems that they've already identified. And today they started talking about that to investors.
Well, that's what I want to hear from you. And what do we understand now that they're talking about this, how they shore up the balance sheet, especially exposure to commercial real estate?
So executives today talked about the main issue being the loan portfolio and this portion that is specifically linked to New York office. So they're saying that their goal over time is to diversify the bank. Essentially what they want to do is make this bank look more like the other regional banks, because right now there's so much concentration in real estate, in lending to the landlords of New York City.
Yeah, and we've talked about this, that the law changes and stuff has really kind of changed the financial outlook, if you will, of these assets or the profitability. One thing I want to ask you about, so as they kind of move forward, investors, the stock's up 13, 14% just in the last 2 days alone. But, you know, the IndyMac deal, go backwards for a second, there was some criticism of the duo and their past link up ultimately. So it'll be interesting to see how they kind of deal with all these assets, that not any deal going forward is ever maybe perfect.
That's right. And so that deal with IndyMac was linked to mortgages.
Correct.
This is lending. So it's a different business. Essentially, the lending to real estate firms and to buildings, both for businesses and for landlords, so for commercial real estate and also for housing. Again, these are going to be, that's different than lending out or giving a mortgage to someone if they're buying a home.
What do we know about the where the money came from for Liberty Strategic Capital at this point, and what the former Treasury Secretary has been doing over the past few years when it comes to fundraising?
So Mnuchin, there has been some pushback, which was referenced in this story. There's been some critique because after he left being Treasury, he was raising money for Liberty from sovereign wealth funds in the Middle East. And that includes Saudi Arabia's Public Investment Fund. That is something that was under scrutiny. What I found interesting is that with this deal, Mnuchin was saying that they initially went out with around 700, and there was so much interest that then they raised it to the 1 billion mark. So it just showed that the enthusiasm that we're seeing reflected in the stock price from other investors was also there when they were pitching this deal to the street.
Yeah, it is interesting, like kind of when you go through it and you look backwards in terms of the IndyMac deal and just these individuals that have been assembled to kind of, again, not apples to apples in terms of the bank, but dealing kind of with I don't want to use the word crisis, but certainly a very troubled situation and trying to figure kind of the way forward, right?
Well, financially, it's a troubled situation and they're buying in at such a cheap price. These are the types of deals. Think about Warren Buffett coming in and supporting Bank of America in its time of crisis way back in 2007, 2008 period. And look how that turned out for him. Again, that was a windfall, and it was also a lifeline for Bank of America. So it's a very similar narrative that I think a lot of people are comparing this moment in time to. You have a bank that has fallen on tough times. The share price is showing that. And already the deal and the investors that bought in early have minted a profit. It's on paper.
Well,
yes.
I was going to say it's only day two,
right?
Or like day one, I guess you could say day one full day, and they're not out of the woods yet, Kat.
No, they're going to need to prove that they have the strategies in place. They outlined them this morning, so I think that is another reason that you've seen the share price remain at a higher level. It didn't jump significantly from where it already jumped yesterday. It's still around the $4 mark, just below last time that I checked. But You're absolutely right. This is a strategic playbook that they're going to need time to show that it's actually working. And I find it interesting, the goal of being more like their peers, but this is a large organization because they bought assets from Signature earlier and they've grown rapidly. That was part of its struggle. They didn't know how to deal with that size that
a lot of pieces there.
A lot of pieces of the puzzle.
All right, Kat Doherty, finance reporter at Bloomberg News. Thank you so much. From one of the most read to another, that on the other side. This is Bloomberg.
You formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
It's Jobs Day, and Bloomberg has the report under surveillance.
We've had unemployment south of 4% for 2 consecutive years.
This is a two-sided sword.
There is a softening in labor demand.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is a very strong labor market.
The White House has got to love this.
This is something huge they want to run on.
Where is the slowdown?
If you look at the reality, it ain't showing that.
The February Jobs Report, Friday on Bloomberg. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the U.S. stock market trading at a record right now with the S&P up 1.1%. 51.62 is where the S&P stands right now. The number to beat for a new record would be 51.37. Again, the S&P up now by 1.1%. The Dow up 174 points, up by about 0.5%. NASDAQ, the composite index, up 1.6%. The NASDAQ 100 index, full of big tech names, doing a little little bit better, up by 1.7%. The 10-year 4.10% with a 2-year at 4.52%. Stocks climbing to records in the run-up to the jobs report tomorrow morning. Spot gold now higher by 0.5%, $21.58 the ounce. West Texas Intermediate crude oil down 0.2%, $78.98 a barrel on WTI, and Bitcoin up 1.5%, 67,490 now on Bitcoin. Victoria's Secret shares are plunging after the beleaguered lingerie maker's full-year sales guidance fell short of analyst expectations. The shares of Victoria's Secret right now, they are plunging by 30.9%. Again, recapping, stocks higher, S&P at a record, S&P up now by 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, folks, this is one of those stories that while you're doing, at least we are, doing our early morning read-in, you stop, you actually read all of it, the entire story, because you actually get a peek into the inner workings of one of the best-known companies in the world. It's also, Tim, one of the most valuable companies in the world.
Yeah, we're talking about none other than Apple and how its nearly decade-long journey to build a car came to a dead end. With the insight and the inside story of the long and winding road of the Apple car, with us we have Bloomberg News Chief Technology Correspondent Mark Gurman, who joins us from our San Francisco bureau. His story also today's big take. Mark, like Carol said, I could not put this story down when I saw it cross the Bloomberg late yesterday. Where does this start?
Yeah, thank you, Tim and Carol, so much for having me. This starts around, 2008. Steve Jobs gives a presentation at the Apple headquarters, and he says, Apple needs to own home, business, and on the go. The Mac had started to do pretty well at the home and business. Apple had the iPhone. They were a few years away from the iPad. But what comes after that? And he imagined it was a car. I spoke to Tony Fadell, who's known as the father of the iPod, and he said that Steve would raise the question, what's going to be the Volkswagen Beetle for the next generation, right? But no car ever really got worked on or came to fruition. It wasn't a big idea under Steve Jobs that the company tackled. But then Tim Cook comes to play. This is tail end of 2013, early 2014, and Apple's mergers and acquisitions chief, Adrian Perica, who used to be a Goldman Sachs banker, he starts holding a series of meetings with Elon Musk. The Model S had just launched. Tesla had started to become popular, but it was nothing like it is today. This was $20 to $30 billion market cap at the time. And they start getting down the road a bit on an acquisition. Tim Cook shoots it down. It was still in the early innings. There were concerns about integrating the EV maker. There were concerns about the profitability and the margins of the car business. But then Apple said, why don't we try to tackle this on our own? So they developed Project Titan. Their hardware chief at the time, Dan Riccio, was given a budget, about $1 billion a year on average over the past decade, to develop this car. They started off by looking at things that were similar to cars at the time, basic EVs, no autonomy. And then they got the big idea to build what essentially amounted to a private jet or a living room on wheels that could drive itself using level 5 autonomy. And they had some incredible aspirations. And then between indecision, technological challenges, market realities, it all fell apart, and our story details exactly how.
I got to tell you, so, all right, Project Titan, as you said, it was called, or should we say bread loaf? And to me, those different names, Mark, speak to kind of the tensions internally as Apple pursued this route of a Apple Card. Not everybody
US
was
natural
always
gas
on board.
futures
In fact,
extend
some
losses.
often were not, right?
There was a lot of indecision and a lot of disagreement, not only in the Apple Car team itself, which is known as SPG or the Special Projects Group, but there was a lot of disagreement on Apple's executive team. For instance, Eddie Q wanted Apple to just sort of make a better Tesla and start off slow. Tim Cook, Jeff Williams, people on that side were really pushing for full level 5 autonomy. Apple's software engineering chief, Craig Federighi, Apple's new hardware engineering chief, John Turnus, they really weren't on board with the car. Apple's marketing chiefs, Phil Schiller and Greg Joswiak, they were not on board with Apple developing a car that looked nothing like a car. They wanted Apple to make a car for people who loved cars, not a car for people who hate cars, which is the type of car that a person who doesn't like a car would want a car that you don't have to drive, one where you can just hang out in the back and FaceTime and watch TV. Right. So there was all this disagreement from start to finish, and obviously, as Tim said, it ended up at a dead end.
Mark, is that disagreement atypical for the product development process? because these, I think it's fair to say that some of the products that Apple has developed have absolutely, no question, been visionary to a lot of people. Are there the naysayers along the way, and that's part of the product development process that creates something in the end that is successful?
You know, I would say the Vision Pro had a similar history of naysayers, people really against the product, similar disagreements from similar people, but that still came to market. But the market realities of the Vision Pro are far different, right? You're able to sort of squeeze out your normal Apple profitability, or they will be able to do so. It does integrate into the Apple ecosystem nicely. The car is a totally different beast with a totally different investment necessary for it to happen, totally different levels of distraction to bring that type of vehicle to market. So certainly the Apple product development process always includes lots of disagreement, lots of debate, lots of screaming, lots of people saying they're going to quit, lots of people who say you're being fired, but you know what, come back the next day. Totally normal in this process. But this, of course, Titan, this was the biggest Apple product bet essentially since the original Mac, right? One of the biggest bets in modern technology history for the iPhone maker, for the iPad company, for the Mac company to create a self-driving vehicle. This was a huge bet, and it really just fell flat on its face.
Mark, I have to say, you know, not only was the internal struggling inside Apple interesting to read about, but also, you know, there were external reaches that Apple made, whether it was Tesla, whether it was Mercedes-Benz, McLaren, BMW. I mean, Canoe, exactly. So like, while Apple so loves to do things right their own way, they did make outreaches, and yet that didn't come to anything either.
Yeah, it's interesting. Like I said, the origin of the Apple car wasn't necessarily building the car. The origin of the Apple car was investigating and exploring what would it take to buy and integrate Tesla and build upon Tesla into the company. Now, there were many fits and starts over the decade. There was a period where they slowed down development of car hardware and focused more on the AI self-driving brain underlying it. And of course, you wanted to have partnerships in your back pocket. If that autonomy system worked out, what are you going to do with it, right? Who are you going to sell it to? Who are you going to license it to? They got down the road on a partnership with Mercedes-Benz. It took a couple quarters for that to fall apart when Apple got so excited about the prospect of its user experience and its self-driving brain. They said, you know what, let's just go back to doing it ourselves. Canoe is so interesting. That is basically a failed EV maker, and the design that Apple toyed with for the Apple car for many years looks very similar to what Canoe ended up announcing.
That's interesting. Hey, Mark, one of my favorite parts of the story was all of the features that, for the first time, I read about in your piece that Apple toyed with, whether it was automatic tinting of windows depending on the light conditions outside, or the idea of like patching in the audio from outside inside the car, which struck me as, look, I'm not a car designer, but struck me as something that I would not want as a consumer. Take us through some of the greatest hits that were put on the drawing board and ultimately pulled off.
Well, I think some of the most interesting work that they did was backup control to the L5, the self-driving system not working. So you had three options that they were looking at. First, basic, makes sense, is an iPhone app that lets you operate the phone as a virtual steering wheel. Obviously, the car would only run at low speeds with this control. The second was they spent a lot of time actually working
NYMEX
on
diesel
like a
April futures settle at $2.69 a gallon.
The car like you're playing in Grand Theft Auto, right? But hopefully not.
NYMEX gasoline April futures settle at $2.55 a gallon.
Or a 24/7 command center where you call them in and they can drive the car for you remotely with a physical steering wheel to get you out of trouble. Not trouble from the police chasing you like in GTA, but I mean if you're stuck in a construction zone.
NYMEX WTI crude April futures settle at $78.93 a barrel. That's down 20 cents or 0.25%.
Hold on, I got to call Apple to take control of the car to get me through this.
I don't, you know, I never want to count Apple out because I think about the impact that, Mark, they have had on our world, certainly on my world. Do you truly count Apple outdone? I know the story, I know the reporting, I respect it all, but might they some way find their way back or nah?
Let's talk about this. Tim Cook's going to be CEO for the foreseeable future. This is not going to be reversed under his tenure. A new CEO comes in, you know, obviously they can decide to throw another 10, 20 billion at this and start over, right? But they really would need to start over, so to speak. So that's one. Two, in my opinion, the the door is not closed on Apple entering the car business. It is shut a little bit. There's a little crack. It's ajar. But there is, one option. They can always go out and buy one of these car companies and use all of their existing infrastructure. So if they're going to get into the car business in the next decade, I would say the only way they do it is by buying an established automaker or even a non-established automaker, something a little bit more nascent like a Rivian or a Lucid.
All right, 25 seconds. What was your favorite nugget of telling this tale?
My favorite part of the story, in addition to that remote command center that you both loved, was the design of the car. The white wall rims, like it looked like from something from the 1950s, just the beautiful external white design of the car, the Boeing Dreamliner like tinted windows, I should say. So really the overall exterior design and ideas for the interior, those were my favorite parts. Unbelievable. And they were all going to be white, right? So that you just kind of knew?
It just remains a design at this point.
For now. For now. A great piece of reporting and a really incredible read. Mark, thank you so much. Mark Gurman, of course, Bloomberg News Chief Technology Correspondent. Check out his story. You can find it at Bloomberg.com and, of course, on the Bloomberg Terminal. That is the Bloomberg Big Take.
Hey, coming up next, we're going to talk about the Miami market specifically and ultra-luxury developments happening there. You're listening and watching Bloomberg Business Week. Let's get a check on the latest world and national news. We've got Amy Morris in the 99.1 Newsroom in D.C. Hey, Amy.
Hello, Tim. Federal Reserve Chair Jay Powell testified on Capitol Hill again today, this time in the Senate, where he reiterated the central bank is rethinking new bank capital requirements and holding steady for now on interest rates, telling lawmakers the central bank was not far from being able to cut interest rates and that rates were far above levels that they might be otherwise. During tonight's State of the Union address, watch for President Biden to propose increasing the minimum tax rates paid by major corporations to 21% and eliminating breaks for companies with high-paid executives. This would affect corporations valued at $1 billion or more. And as we wait to hear the president lay out his vision in this election year address, Tobin Marcus, the head of policy and politics at Wolf Research, says he expects an energetic performance from the president.
But they can manage to engineer another sort of organic moment that showcases some nimbleness and energy and sort of quickness on his feet. I think that would be ideal for them. But short of that, I think just a crisp delivery that shows some energy and sort of free of any notable flubs.
And that is Tobin Marcus. He's with Wolf Research. You can join Bloomberg Radio and Television tonight at 8:30 Wall Street time for our special coverage of the State of the Union. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it? Peacock.
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths.
And Brent crude futures settle at $82.96 a barrel. That's up 0 cents or 0%.
Are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Next time on The Deal.
I realized a long time ago that being a football player or an athlete, you can get into a room, but once you get in the room, you have to prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the U.S. stock market trading at a record, very close to the session high right now, with the S&P at 51.59, higher now by 1.1%. The Dow up 134 now, up 0.4%, while the NASDAQ Composite Index up 1.7%. Stocks are hitting records in the run-up to the jobs report tomorrow morning as investors bet that some of the world's major central banks will start slashing rates as soon as June. Spot gold right now is up 0.5%. The 10-year 4.10%, the 2-year 4.52%, and crude down 0.4%, 78.83 for a barrel of WTI. Bitcoin up 1.5%, 67,518 on Bitcoin. New York Community Bancorp's new leader wants the beleaguered commercial real estate lender to look more like other regional banks. New CEO Joseph Otting, a former controller of the currency, was named to the post yesterday as part of an equity investment of more than $1 billion from investors led by former Treasury Secretary Steven Mnuchin. His comments came in a conference call with analysts. So today we're looking at NYCB. The stock is up 4.5% right now. That's on top of yesterday's 7.4% advance for the year to date. However, the stock is down 63%. Again, recapping here, stocks are higher. We are looking at a record now with the S&P up 55, up 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, so appreciate it. Charlie Pellet there. Well, you might recall that Bloomberg News was reporting out last month on Florida's southwestern coast, long one of America's fastest growing regions, and how it is losing some of its boomtown swagger as a home insurance crisis and other soaring costs make homes unaffordable. It's a serious situation.
It is, and at the same time, Carol, we've also talked about how the migration of financial types down south, think Citadel's Ked Griffin, more, are now calling South Florida home and pushing up prices not just of residential real estate, but also commercial real estate too.
All right, so there's a lot going down south, specifically in the state of Florida. With all this in mind, joining us to talk about the Miami market specifically, with us is Dina Golden-Tayer. She is Executive Director of Sales over at Douglas Elliman. She joins us from Miami. Dina, good to have you here. A lot to talk about. First up, how are you, and how would you describe the luxury market in Miami? I mean, technically you're known as an ultra-luxury specialist, so talk to us a little bit about demand, pricing, what you are seeing.
Thank you so much for having me today. I am indeed an ultra luxury specialist focusing on properties 10 million and up. And our market, as they say, is caliente. And there is no sign of a slowdown for the 10 million plus marketplace.
All right. Drill down a little bit. So no slowing down. So the same as 6 months ago, 12 months ago. Give us some more color. We're Bloomberg. We'd love to dig a little bit deeper. Sure. Give us an idea of how it's playing out and how it compares.
Absolutely. This time last year, we in fact had a much slower high season being defined as the months of December, January, February, March, April, when the snowbirds want to be here. And this year, we're having the type of high season that we had hoped for last year, which is pending sales almost every other day for high quality assets that are appropriately priced. So if you're watching Zillow, you're going to see a lot of stuff go pending.
Who are the buyers right now, and how are they buying? Are these all cash buyers? Where are they coming from? Give us insight there.
They're the usual suspects. They are coming from New York, from other northeastern states. They're coming from California and other western states, and they're coming from Canada. The European buyer has slowly trickled back into the marketplace post-COVID, but they're not as strong as they were in prior years.
What about buyers from Asia and buyers from Russia?
No and no. And the buyers that I'm working with are not getting mortgages, or at least the deals are not finance contingent.
What's a typical deal on the high end of Miami? You use $10 million as the price point. Is that kind of the mean, the median? Give us an idea, because I know that they can go a lot higher, especially if you do something like Indian Creek Village, which Bloomberg has written about as being a place where millions don't matter. It's all about billions and billionaires.
Great article. Great job, Felipe. 10 million gets you a nice condo. It gets you a nice house, a very nice house not on the water, an average house on the water. 20 million is where it's at if you want something better than nice. And my 20 million plus product, I have the shortest days on market than any other sector that I represent. In fact, it takes me longer to sell properties 5 to 15 million than homes that are over 20 million, where I average about 120 to 150 days on market.
Dina, who's selling right now? Who doesn't want to be there and who wants to sell for these prices?
Sure. I mean, that is a broad question because people selling don't necessarily not want to be in Miami. They may be expanding their family, or they may be going through a divorce. A lot of the people for whom I sell for, they are staying locally, just in a different asset class, like downsizing or upsizing, or moving from a house to a condo or vice versa.
You know, Tim was asking earlier, Dina, about who's doing the buying, and we've talked, Bloomberg has done a lot of reporting about kind of Wall Street South and the amount of financial folks that have moved down there, not only to live or buy a second home, but to actually set up shop and do work, and that has certainly had an impact on the area. Give us a little bit more color, if you can, around what you are seeing on that front specifically. Is the pace continuing? Is it picking up? Is it slowing down at all?
I think if we compare the pace to the COVID times, it will always feel like a slowdown. Now Miami and Miami Beach, where I specifically focus on, has found a new rhythm. We continue to have an influx of the Wall Street types and other financiers from around the country. They are still taking prime positions at the schools for their children and the top reservations in town, because we have pretty much the same restaurants that New York City does, if not better right now. So the pace is healthy. It's just not a COVID pace. And to compare it to that would always look like we're in the red.
What about folks with backgrounds in crypto right now, especially given the rise in crypto?
In 10 minutes time at 3 p.m. Eastern, we have the US consumer credit with a forecast of 10 billion and a previous of 1.56 billion. In 5 minutes' time, at 3 p.m. Eastern, we have US consumer credit with a forecast of 10 billion and a previous of 1.56 billion. One minute remaining. $10. 19.495 billion. 19.495 billion, higher than forecast 10 billion. We have posted the US Consumer Credit January report on the feed.
demand for live to the man behind the likes of Disney on Ice and the Ringling Brothers Circus, Ken Feld of Feld Entertainment, joining us to discuss how the sector is faring amid higher ticket prices.
Never seen Disney on Ice, but circuses, you bet. All right, plus you got shares of Novo Nordisk not slimming down, hitting a record high on optimism around its obesity pill. This time, it's the stock of the hour.
Yeah, I have to break it to you. Disney on Ice is just circus on ice, and a big test for Broadcom coming up. A gain of over 50% since the company's last earnings release. The stakes are high for the next earnings release coming later tonight. We're going to break down what to watch. John Vinn over at KeyBank going to be joining us. All that and more coming up in just a bit. This is The Close on Bloomberg.
Top names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Today, as the border, the economy, and the November elections dominate the headlines, President Biden will deliver his State of the Union address. Balance of Power's Joe Matthew and Kayla Lyons will bring you live global coverage starting at 8:30 p.m. Eastern. Bloomberg, context changes everything.
All right, this is why I'm a little less negative, less skeptical on the rally right now. The equal-weighted S&P index finally setting a new record for the first time in 2 years. This shows the S&P versus the equal-weighted index. Yes, the S&P is outpacing, however, a record high for both. So let's get more into kind of value and what do you do with that information? Chris Davis, Chairman and CEO of Davis Advisors. We've been making a lot of hay about breadth, and is it good and is it bad? Is this the time for value?
Well, I think that it's, value is, I always say, a strange definition because nobody would intentionally buy something that was overvalued, right? So growth is a component of value. And I think what's happened is there's been so much focus on momentum on what's already gone up that a gap has opened up in economics between businesses that are profitable and, all money is green, and the value of a business is how much green it generates over the course of your holding period. And so I do think there was too big a gap between some parts of the market and others. And whether we call that value versus growth or not, it certainly does seem to be broadening out that way.
So where we were waiting was kind of small caps to catch up, more of the cyclical, deeper value names like, I don't know, if you want energy or industrials, et cetera. Is that where you want to be right now?
I think financials. I think that, financials really since the financial crisis, every time there's a whiff of economic uncertainty, people just panic out. They expect a financial crisis around the corner without thinking that was really almost a once-a-century event, certainly once every 60 years. You haven't had a banking crisis like that since the Depression. And the result is that financials and really select banks have kept earning more and more, year after year after year after year. They've built their capital, they've gotten safer, year after year after year, and yet their relative discount to the market has gotten wider and wider and wider.
Yeah.
So my view is that's really where the biggest opportunity is, but you better be selective, because you don't want to end up with First Republic.
Well, let's talk about the selective nature of that, because not all banks are alike. I mean, obviously you have the big money center banks. I mean, look, JP Morgan isn't going anywhere.
Yeah.
They're pumping out cash better than anyone. They're going to be around. Go down a tier, though. What are we talking about? What's attractive to you there?
Well, you know, I started our financial fund 30 years ago, over 30 years ago. And back then, it was always easy. You bought small banks that were selective because they were better managed, they grew better, they had, you know. And for the first time in my entire career, I actually think the big banks deserve a premium. They deserve a premium because they have a lot more capital. They have a lot more diversification. They're more tightly regulated, and they have less relative credit risk than the smaller banks. So when you go down to the next tier, certainly there's a tier right below the biggest, U.S. Bancorp, PNC. Fabulous. Once you get down to smaller banks, then you have huge disadvantages, not just diversification. Think of technology spending. How do you apply AI when you're a small bank? How do you build your internet presence? And so the big banks, for the first time in my career, have really developed true competitive advantages and deserve a premium.
So financials is a big one for you. You mentioned AI. I think that's going to be a big one for everyone. What about in the EV space? Because there's been so much talk about the sort of the genesis of this EV revolution, which at least for right now seems to be maybe hitting a speed bump, let's just call it. And a lot of the same concerns about AI, that there's such a narrow rally focused on NVIDIA. That was the same conversation with Tesla, right? It was like if you wanted to invest in the EV space, there was kind of one game in town, at least up until about 2 years ago.
Well, I mean, a little bit like Alex and I were saying about growth and value. You know, whenever there is a trend that is undeniable, the growth of the internet, the growth of AI, the electrification of the auto fleet, you know those things are going to happen. And investors pile into whatever is the first derivative play on that. And I would say, when I look at EV, I think the safest place to be is copper, right?
Copper?
Because you know, the electrification, you think of companies like tech, you have an asset that if it was your family asset, you would pass it to your grandchildren. You have long-lived assets. You have copper is, of course, going to grow as a percentage of the economy. Supply shrunk for decades because nobody was interested in commodities. So I think we tend to think that way. And similarly with things like AI, we think, who are the beneficiaries? And going back to financials, what I can tell you, if the story I read on Bloomberg yesterday was true, where they had an AI, JP Morgan announced an AI application for customers in cash management that eliminated. Think of what that means for just the cost structure of our banks. So, and again, the biggest banks. So that's how I think of applying those things.
All right, Chris, we got to get you back to talk about some of these other themes. Going to have to leave it there for today. Chris Davis, Chairman and CEO over at Davis Advisors. All right, coming up, he was just talking about AI. We are going to talk about that AI rally and a big test tonight as chipmaker Broadcom gears up to report its latest earnings. We're going to break down what to expect after the break. This is The Close on Bloomberg.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? Are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
DOJ or other authorities.
Could face bigger challenges next.
And was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
All right, time now for our top calls. The big movers on the back of analyst recommendations, and we start off with Akamai, getting an upgrade over at Baird to outperform, with the analyst saying, take advantage of recent weakness. That's his quote, saying that with the stock trading below its 5- and 10-year average valuations, there is an opportunity there. He sees strong growth ahead for Akamai's security business and untapped potential in the compute segment, also lifting the price target to 135 from 128. Investors lifting the shares by 2.5% on the day. Next up, let's take a look at Victoria's Secret. An awful day here. JP Morgan downgrading to underweight following a lackluster Q4 report. The retailer sales, they just haven't improved, and the analyst says margins are going to continue to be constrained in the next 1 to 2 years with limited visibility to return to top-line growth. That price target also dropping down to $15 from 22. The shares having their worst day since they returned to the public market in 2021. And finally, Micron, an upgrade to buy from hold. This over at Stifel, a new price target of 120. The analyst Brian Chin says Wall Street has underestimated the memory chip maker's earnings potential, particularly for the upcoming fiscal 2025 year. He sees Micron going through a sweet spot right now that leads to a production ramp-up for high bandwidth memory chips for use in AI. Those shares moving higher on the day by about 3%, and those are some of our top calls. We do want to stay in the chip sector and with the focus on AI with Broadcom set to report earnings after the bell. It's going to be the next big test for the AI rally. John Vinh joining us right now, Managing Director and Equity Research Analyst at KeyBank. John has a $1,200 price target on the stock and an overweight recommendation. All right, John, I never really know where to start anymore with Broadcom. There's so many things going on with this company, from its legacy business to the new promise with AI to all the drama surrounding their various M&A activity, or lack of it, if you will. What's going to be most important to you tonight?
I think the key focus is going to be kind of two things. Obviously, it's going to be the performance of their AI business, which is obviously highly levered to Google's TPU, right? They are the ASIC provider for Google's TPU, and they also provide networking component for the broader AI supply chain. So they're going to be broadly levered to AI. Second thing that investors are going to be focused on is just the execution of their latest acquisition of VMware, right? So Broadcom is known for extracting significant cost synergies from their acquisition, driving 60% EBITDA margins, and obviously raising pricing on their customer base going forward.
And so when it comes to what they articulate in terms of not just the promise of AI, but the substance, the idea here that whatever demand they might be seeing, whatever long-term promise they might be having, that is going to show up in the bottom line numbers? Are we going to see that in this report, or maybe in the next couple of earnings reports, or do we have to wait longer than that?
I think you're going to absolutely see those synergies start to show up in this quarter, right? It's, these things take time. They provide a full year outlook, but you're absolutely going to start to see those synergies show up on the byline in this report, and according to our view.
What's going to be the softest stuff here? Like, what are the worry points to look out for, John?
Yeah, it's going to be the non-enterprise networking. Broadband is going through an inventory correction, and enterprise storage. Enterprise storage is, quite soft. It's tied to the broader enterprise IT budgets, which we know are softer entering the year. So those are going to be the offsets to the strength that you're going to see in AI.
Who are the main competitors at this point with Broadcom, and what did we learn from their quarters?
Yeah, we're they're going to compete against, probably the closest comp is going to be Marvell. Marvell competes with them both on the networking front. Marvell also competes with them on the AI ASIC front, right? Helping their customers develop custom ASICs. And then you also have to look more broadly and recognize that, NVIDIA is kind of one of their competitors as well. I mean, NVIDIA focus on providing merchant AI GPU silicon to all hyperscalers versus Broadcom, which is focused on providing custom silicon.
Why don't you think, though, we've seen maybe a little bit more excitement about Broadcom's AI strategy? I mean, I sort of understand exactly what's going on with NVIDIA, or at least why people are so enamored with them. Even in AMD, even in Microsoft here, you just don't see Hock Tan and his team getting the same type of attention or the same type of credit for pushing into this space. Is it simply because they're behind, or people don't understand the story?
I actually think you are. It is still one of the top performing stocks within the semiconductor space this year. You definitely have seen a re-rating in the multiple by a couple turns over the last year or so, and we think that is in part for them getting credit for AI here. Maybe the question, I think maybe what you're asking is, why aren't they trading at a similar multiple to NVIDIA?
Yeah.
The answer is that they're just a lot more diversified, right? I mean, AI is, data center business is, over half of NVIDIA's business, where, AI for Broadcom is going to be, less than 15% of their revenues.
All right, John, thanks a lot. Really appreciate it. John Vin of KeyBank. It's like when you're too big, then you make the argument that, though, you're not getting the pure play, but then at the same time, when something goes down in one of the businesses, then, okay, you make up for it otherwise. But the stock hit a 52-week high this week, too.
Yeah, I mean,
wonder expectation-wise.
It's doing fine. Look, I mean, it's up 25% to start the year, which for, 2.5 months or whatever we are into the year here, that's phenomenal by any stretch of the imagination. Of course, NVIDIA's up 86%, AMD's up 40-something percent, et cetera, et cetera. And I think that's more what I'm getting at. It's not so much that they haven't returned to investors, is that it's not commensurate with what you're seeing with the others.
So I guess I wonder how you, what would be success then on that front? If you're not going to be able to deliver the same kind of numbers as NVIDIA, but doesn't mean you're not delivering anything at all, is there more value there?
I feel like the story is important, right? I mean, because you think about the success of Jensen Huang. Is that just because they have a ton of orders, or because he's really woven a great narrative about the promise for NVIDIA?
And maybe we'll see that. All right, really cool. All right, coming up, the man behind the Ringling Brothers and Barnum & Bailey Circus, Ken Feld, Feld Entertainment CEO, awesome. Joining us next on The Close. This is Bloomberg.
Do you see a future for Monumental as a public company?
Yeah, I think so. I think what we found is the leagues have opened up to new pools of capital. Over the last year or two, both the NBA and NHL have allowed professional investors to come in, not as individual owners, but as funds. So that's a whole new pool of capital that didn't exist before. Sort of shows a whole new asset class opening up for professional sports, not just teams, but professional sports enterprises.
I think the sophisticated analysts will be looking at this industry, and as our revenues start to get in the billions of dollars, yeah, I think that you'll see a wave of companies go public. Whether we will or not, there's a big responsibility when you're a public company. And I tell people, we're a public company already. The scrutiny that you're under in running a sports team is, I think, much higher than a public company CEO has to live with. We'd be prepared to do it. Just the market would have to be right. We'd have to emotionally be ready to do something like that. But I think Monumental will be one of the 3, 4, 5 best-in-class organizations that if that time was there, sure, we could go public.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the This is Bloomberg.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. Are you watching State of the Union tonight?
Yeah, I always say I'm not going to do it, and then of course I end up watching it.
Are you watching the Oscars on Sunday?
I will. I can say with certainty I will not.
Okay,
Yes.
Romaine is
Yeah.
a perfect example of pretty much the rest of the United States. So this is an amazing chart that came from Mike
Wait,
McKee.
I'm in line with the rest of the United
You are
That's
totally
the first time
in line.
anyone in my life has ever
This
said
is
that.
happening.
Yeah.
So Mike McKee
I feel blessed.
digs into data, goes down these deep holes, and then emails me stuff. And this is one of the things that he emailed me, which I loved, and that's taking a look at the viewership for Oscars versus State of the Union. Surprisingly, the blue line is what we're seeing when it comes to State of the Union. The white is the Oscars.
Yeah.
Basically means 27 plus million viewers watched State of the Union, whereas 18 million watched the Oscars last year. So you were an example.
This chart and the fact that you and him were emailing this to each other in the middle of the night is exactly why I love working here, because it's just the biggest group of data nerds in the world that you're going to find right here at 731 Lexington. So I love this chart, though, and I was surprised by that. I mean, I guess it kind of makes sense, because in theory, the State of the Union matters more to your life than whatever the heck's going to happen on the Oscar stage, so you maybe have a more vested interest in paying attention to that.
What I want to know, and maybe this is the thing for Mike, is demographics. So what kind of age range is watching?
I would say old and older.
But we don't know.
Yeah.
I mean, maybe not. Like if you have 20-year-olds coming in and watching State of the Union, then we got ourselves something good.
Yeah, but we'll see. I mean, maybe the Oscars bounces back. I mean, the Oscars has kind of been on decline for the last few years. I don't know.
I think people are
if this year
hoping
will
that
do that.
Barbie Mania will do something on Sunday.
Yeah, I love that movie.
Yeah, he didn't watch it. You didn't watch it.
I did. My wife forced me, actually.
Movie. All right, anyway, let's stay with it. Let's not get into this, and we're going to fight. It's going to get ugly. All right, let's go to broader entertainment here. Our next guest is a huge player in the live entertainment space. Kenneth Feld is the man behind acts like Ringling Brothers and Barnum and Bailey Circus, Disney on Ice. It's a family-owned business and has been such for decades and entertained over 700 million people all across the globe. Also has some entertainment in Las Vegas at the Mirage. Siegfried and Roy's really started that in 1990. Created Feld Motorsports with the acquisition of Monster Jam. I could go on for a while, but maybe we could just go to Kenneth first. Kenneth, hey, it's really great to see you. Thank you so much for joining us.
Thank you for having me on the show.
So I just want to get an idea of what's demand like for everything that you put out there? Taylor Swift has just rejuvenated the globe when it comes to her power of live events. Are you noticing something similar from monster trucks to Disney on Ice to circus?
We have seen since the pandemic, a great resurgence in live entertainment, because it's something that you can't replicate. I mean, you have to go, you have to be there, and it touches really every emotion in all of our live entertainment. So it's been doing great, and it continues to. And 6 months ago, we premiered Ringling Brothers, Barnum and Bailey, and we had gone on a hiatus almost 7 years ago. And so we rethought that, reimagined it, and brought it back, and we've now been on tour for almost 6 months, and every week it gets better and better.
Looking forward to it, very much so. Kenneth, talk to me a little bit. You mentioned demand is super strong. What's it cost to put on stuff like this nowadays, and sort of how much can you charge? Talk me through that dynamic.
So we're geared for families, and we want to be affordable for everyone. And so we price accordingly. So every city may be different pricing, depends on where we are geographically. But an average ticket price for Ringling Brothers Barnum and Bailey, I mean, you could go and get the entire VIP thing, but for $30, $32, you can see the greatest show on earth.
What exactly does that show look like now, Ken? There was a lot of discussion back in 2017 when effectively, you know, you guys kind of stopped producing the circuses for a while, for something like 5 or 6 years. You brought it back, a new look. I am curious as to how you take something as old as the Ringling Brothers Circus is, 100 plus years, and make it fresh and relevant for a completely new generation.
So it was a challenge, and we were on hiatus for almost 7 years. And during that time, we thought about what should Ringling Brothers and Barnum and Bailey be for families of today and tomorrow. What do they look for in entertainment? What is the feeling? And you know, today you think of TikTok, but the attention span is so short. So basically, every 3.5 seconds, there is some kind of change in what we're doing. It may be with music, it may be with lighting, it may be with video, it may be with how the performers work. But it is fast-paced, and we wanted people to walk into the arena, and the first thing they would see is something unlike anything they'd ever seen or imagined. And so it was really the creation of creating a playground for all these performers to do, you know, their incredible skills, whether it's flying trapeze, whether it's trampoline, whether it's Wheel of Destiny, and to look at it like a franchise. So we come once a year, but families should be playing Ringling every day of their life.
Well, it's certainly a spectacle, and I think the reimagining is intriguing, Ken. How much did that change the cost to produce something like that? Was it materially different than the previous iteration before you guys went on hiatus in 2017?
It was quite different because we had no infrastructure. So everything was brand new. Everything that we created, from every light, all the rigging, everything that you could imagine was brand new. So yeah, it was quite expensive, well into the millions and millions of dollars. But we have the nucleus of a show that will run for 2.5 years, this first edition, and then we'll go from there. But the audience has really received well what we brought, and it's exciting. And it's exciting to see families together in what I call enjoying simple fun. And in today's world that's so complicated, we are an answer for just having pure fun that the family can enjoy together.
All right, Ken, going to have to leave it there. Great to catch up with you. Kenneth Feld over at Feld Entertainment. Of course, known for the Ringling Brothers Circus, Disney on Ice, which you haven't seen yet, Alex.
I've not seen it.
We didn't even get a chance to ask him about the Monster Jam, Monster Trucks.
Monster Jam is your jam.
I know it is my jam, but we ran out of time.
I would not have known that.
So, yeah. But anyway.
I like the circus, except clowns.
Yeah.
They scare me.
What?
The clowns, like, you know.
They scare you?
Yeah.
Even now?
Yeah.
As an adult?
Yeah.
Okay. All right.
No?
No.
We don't know where to go from here now.
All right. I don't know where to go from there either. So let's just pivot
You feel me.
to talk about some of the big movers here as we get closer to the closing bells. Just about 22 minutes until those bells ring, but we already got one bell rang overseas, and that's on Novo Nordisk. Those shares overseas hitting a record high. The ADRs here also moving higher on the day. Optimism around an obesity pill. It's our stock of the hour. An explanation coming up next. This is The Close on Bloomberg.
US 2-year Treasury yield falls to 4.508%, the lowest since February 15th.
You formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
This week, Bloomberg brings you the latest from China's annual National People's Congress, including China's budget plans, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, now weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
All right, time now for our stock of the hour, a closer look at Novo Nordisk, quite frankly, the stock of the year. Shares of the drug maker soaring on the news that Cigna struck a deal with the company that aims to widen coverage of GLP-1 treatments. Abigail Doolittle joining us for more on exactly what's going on here. Is this why the stock's at a record high today?
It certainly is a piece of it for sure. I mean, we have AI and then we have the weight loss drugs. And so this is, of course, in that weight loss drug coverage area. But they are really the victim of their own success in some ways because it's such a big market at this point. This stock, if you can believe it, up 256% over the last 3 years. The bulk of their revenue, nearly $200 billion by the end of this year, is these weight loss drugs. That the demand is so strong for it that the prices have skyrocketed to some extent. So this is an attempt to cap that. So their PBM, Evernorth, that's the old Express Scripts, they basically will be offering their clients, basically employers, health insurers, a 15% increase cap. Now, what doesn't make so much sense to me here, and I don't understand, maybe you guys do, is they're saying they're going to achieve this in a number of ways, including helping people with obesity and coaching. But I thought the whole point of these weight loss drugs was that it's, well, I know it's not a pill, it's a shot, but it's something that you don't really have to take the tough measures of, say, exercise or eating less. But apparently that's a piece of what this is. So
well, I think you're supposed to. I just
you're supposed to.
Well, I think it curbs your appetite.
It does.
So then, therefore, like from that perspective, it does help. So, but what's so interesting, if you do the pill, in some ways you could argue be much more accessible. And
there is a pill by now?
They are working on it. So one of the reasons why we're looking at a record here is because a potential pill. They showed some new data showing that this treatment helped patients in early stage clinical trials shed 13% of their weight in 12 weeks.
Wow, it's incredible.
It's huge, right? Yeah. And then it's also the trickle down. Like, does it affect other kind of companies on a tangential basis?
Well, that's a great question, Alex. And it's interesting because I was talking to a doctor about how these drugs work, and it's something in your stomach where you have this sense of like real satiation is, I don't even know if that's a word, but being sated, being full. feeling full, and that it really does work. And I think that's why people are losing so much weight. The food stocks, interestingly, today are down. Now, I didn't expect it to have so much of an impact, but I think that people are taking seriously that this could really widen the coverage of these drugs, who gets to use them. So you have the likes of J.M. Smucker down. You have the likes of Conagra, Mondelez down. I'm kind of surprised. And over the last couple of years, I was mentioning how much we do have Novo Nordisk up more than 200%. The food indexes are down. So people are, but it's also interesting because you guys have done interviews with some of these CEOs. These food CEOs, they really are saying that they're not seeing it all that much. So there's a little bit of a disconnect.
Definitely going to say that, I would think.
That's true.
Thank you very much. But off the record, but then on the other side, I was speaking with Novo Nordisk CEO, and he was saying people, like CEOs of those companies, call him. He wouldn't say which ones. But they call him and say, "I'm freaked out. What do I need to be worried about?"
Yeah, I mean, I guess they should be freaked out. I mean, if these things work the way they do, or at least the promise that they're going to work this way, and we're going to be eating less, or maybe potentially eating healthier, then maybe they should be worried. But that's called adaptation.
It is.
I mean, once rode around in horse and buggies, no one's with clowns in the back seat, and no one's advocating for that anymore either.
No one is advocating for that.
There are a couple of people in rural Pennsylvania, but that's about it.
Or maybe at the circus.
Yeah.
With the clown and the horse and buggy on that. But anyway, Novo Nordisk, that stock definitely popping here on that news, up by as much as 7%, the most about 7%.
Yeah. Okay. All right.
Once you bring in clowns, it's over. There's nowhere to go from clowns. Am I right?
I like clowns, Alex.
That is weird. All right, coming up, we're going to count you down to the closing bells with clowns.
They bring joy.
With Melissa Brown, who will save us from this conversation, Managing Director of Applied Research over at SimCorp. This is Bloomberg.
Jobs Day, and Bloomberg has the report under surveillance.
We've had unemployment south of 4% for 2 consecutive years.
This is a two-sided sword.
There is a softening in labor demand.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is a very strong labor market.
The White House has got to love this.
This is something huge they want to run on.
Where is the slowdown?
If you look at the reality, it ain't showing that.
The February Jobs Report, Friday on Bloomberg.
Now, women on average have about a 30% lower, amount of money saved up for retirement compared to men.
Yes.
So what are you doing about that?
Yeah, so we launched a campaign called Retire Inequality. And we do know that women retire with 30% less. Women make 83 cents on the dollar. And so there's a couple of things that we're doing. One, it's having this conversation and making sure that we all are aware that there is a gap. By the way, women live longer than men, so longevity risk is a real factor. Secondly, it's about making sure that we are talking to women about what can you do differently. And so whether that's negotiating pay and what are some tools that are out there, making sure that you take the time to negotiate, because we know women do not negotiate as much as men, which puts you at a disadvantage to start. But then also along the way, making sure that women are securing their own retirement, and that as part of their retirement plan, we're having much more conversation around guaranteed income as well. And so ensuring that we understand what are the nuances for women. If you think about COVID, 2 million women exited the workforce. They did not continue to contribute to their 401k or 403b plan. And so how do we make sure, as a matter of policy, as a matter of engagement, that women can have an opportunity to catch up, that women can understand that if you exited the workforce and now you're back, that's 2 years of compounding that you were not able to take advantage of, and how do we continue to make sure that we're educating them and giving them the tools that they need to get back on track.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything.
So looking now to the market on close, imbalance settling at 1.4 billion to the buy side.
This is the countdown to the close. Romaine Bostic alongside Alex Steele. With 10 minutes until we get to those closing bells, Alex, we do have a bit of a rally on our hands.
Record rally,
Yeah.
equal weighted index for the S&P and the S&P.
Yeah,
and
that should be a good thing, right? The last few rallies that we've had to these record highs were all about the Magnificent Seven, or at least a small cohort of stocks. You got your broad-based rally now.
I do. I feel a little better about it. I mean, the stocks index or the semi-index is also at a record, so it's not, tech unrelated. The S&P tech index within the S&P is the best, but nonetheless, broadening is broadening. And take a look there at the KBW Bank Index, regional bank index, up by 0.2, eking out a gain despite all the drama of NYCB.
Yeah, absolutely. Here, a bit of a rebound there, and I think it shows you that investor sentiment is still tilted, well, I guess to the bullish side. There is a search for opportunity and a search for a return. The big question simply is, where do you find it and what can you stomach? Melissa Brown joining us right now, Managing Director of Applied Research over at SimCorp, joining us to help count down to the closing bell. And Melissa, I do want to start off with investor sentiment right now. I mean, can we paint that broad of a brush? Is everything really positive, at least perceptions?
Well, the way we measure market sentiment, which is to look at the types of stocks that people are buying, it's basically been neutral for quite a while now, particularly in the U.S. It's actually better for markets outside the U.S. than in the U.S.
So what changes that, if anything? Is there a reason that's driving that? Is that economic fundamentals, corporate fundamentals, or just valuation overall?
I think it's a combination of having some very good news, for example, on the jobs front, and then also having some not so good news on the valuation front, or we still have a lot of geopolitical concerns that are going on. So I think you've got those two things kind of fighting each other out.
So are we in a bubble then, or no?
I don't think we're in a bubble.
Okay.
Valuations are high, but not outrageous. And where we've seen, some of the Magnificent Seven and so on, while their valuations are higher than many other stocks, they're not in the stratosphere. So it doesn't look like a bubble yet.
So I guess this is a silly question, but bubbles happen until they don't. So I guess from that perspective, it's not really when to buy, it's more when do you sell. Are you starting to have that question percolate?
Well, I mean, that question, it is kind of always percolating, but we are seeing more and more, I think people coming into the market, we're seeing trading volume increase for the first, with a substantial increase for the first time in a long time. The problem is that trading volume is mostly in technology names.
Oh, interesting.
And so I don't think we've necessarily gotten that last investor in yet that might suggest we're at the top of the bubble.
Yeah. Well, it's funny too. I mean, we talk about the potential for a bubble, but we also have to kind of talk about the backdrop of interest rates. Jay Powell was just on Capitol Hill for a couple of days. Look,
money market assets hit a fresh record $6.08 trillion in the week to March 6th.
Exactly when we'll start. How much does that matter right now? What are the correlations looking like right now in the equity space and with yields?
Well, I think it actually matters more than you would expect, since he hasn't changed his tone at all. But we saw yesterday and again today, markets seem to react very favorably. And so I think that investors are really hoping for that rate cut. We saw the CME Fed Watch, the probability for a rate cut go up a little bit, not a lot, but go up a little bit for a rate cut sooner.
Yeah.
So I think the markets did like that.
Well, let me flip that. I'm going to ask you the same question, but in a different way. How dependent do you think an additional leg to this rally is going to be on a downward shift in interest rates?
you know, it's interesting because, you know, one thing we've observed is that rates have been high for a while and, you know, relatively high. They're not extremely high. And we've still been in a very good economy with strong jobs growth, with good corporate profits. I don't think we necessarily have to have that rate cut in order for, you know, for the economy to continue to look pretty good.
So you feel that sentiment can stay strong even if we don't get a rate cut?
I'm not sure that sentiment would necessarily agree with me.
Okay, but the economy would agree with you? The economy would agree with you?
I think the economy would agree, yeah. I mean, things have been, you know, have been looking pretty good despite relatively high rates.
Okay.
Now, companies are starting to refinance, and so we could start to see it in the profit numbers over the next few quarters.
So I guess maybe a different question is, do you need a cut for the rally to broaden even more and stay broad?
I think that, yes, I think you probably would need to see a rate cut. Right now, you've got, you know, a relatively narrow market, despite what we're seeing today, but it's generally been fairly narrow. That's focused on a particular theme and not on, wow, we've got this great economy that makes me want to come in and buy all stocks.
But getting back to that idea, though, of investor sentiment, it's funny, as we're speaking, we were getting headlines across the Bloomberg terminal with the latest weekly data on money market accounts. That's still at a record. Still, we talk about this cash on the sidelines and whether it's going to come back and whether it's going to come back into equities here. When I see $6 trillion still sitting in, you know, relatively high yield money market accounts at a time where people think valuations might be stretched in the market, what incentive is there to come off the sideline?
I mean, I think, you know, what I think happens in typical ends of bull markets is that last investor says, I'm missing out. I don't want to miss out anymore. I've got the liquidity, so I'm gonna come in. And that, you know, I think that's where you start to see the topping out.
And if we do sort of see more confidence of those folks maybe finding better yield, better returns outside of just short-term, you know, cash-like instruments here, do you think that money would flow into higher risk assets, meaning something like equities, or in maybe just other parts of fixed income?
I think we'll probably because the equity market is where the headlines are, and so I think that money would flow into equities, perhaps also into high yield bonds, or, you know, other fixed income type instruments. But if rates come down, maybe they become somewhat less attractive. And equities, again, are attractive. So.
All right, Melissa, always great to talk to you. Melissa Brown, Managing Director of Applied Research at SimCorp, helping us count down to the closing bells. Those bells right now, Alex Steele, about 3 minutes away. We're off the highs of the day, but still some pretty strong gains here, including 1.5% on the NASDAQ and a solid % gain on the S&P 500.
Yep, and pretty much across the board, I think most indices are in the green with the exception of financials and real estate, but just by a smidge. But really, it's tech outperforming, but also communication services, but materials, consumer discretionary, all not doing terrible, doing pretty well into that jobs number. I guess my question is, for tomorrow, do you think we're going to get a number that backs up that January number, or are we going to learn that strong data in January was like a snafu?
It's so hard to say because I mean, obviously I'm not an economist, but you think about the trajectory that we've seen. I mean, it's still a downward trend in terms of lower unemployment, higher employment in terms of the actual jobs numbers themselves. Why am I supposed to believe that got arrested by one particular month?
It's true. It's true. It is quite interesting, but I wonder if we're just positioned in very much one way, right? Like there's tons of calls. Who's buying hedges? Like no one's buying downside protection, right?
And how many strategist notes have we seen raising that issue here? Yes. That could become a bugaboo for the market, but stick with us. We're going to break down all of the price action on the day as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's our global simulcast, joined right now in our television studio by Scarlett Fu, Carol Masser, and Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms. Carol, coming off what had been a two-day sell-off, now flipping to a two-day rally, and we have recouped all of the losses from earlier this week.
Pretty remarkable, right?
Yeah.
It's kind of interesting in a week that's been full of Fed speak, Jay Powell speak, if you will. I am like obsessed. I'm looking at my Bloomberg with what's going on in semiconductors. I know we're going to get Broadcom after the closing bell, but again, the March higher, we're here at a record level here on individual names and also the stocks specifically. So we continue to see outperformance, or at least performing expectations, or I don't know.
Expectations. NVIDIA hitting new records today, Broadcom hitting new records. That said, Tracy McMillan over at Wells Fargo Investment Institute said that they're actually cautious in an environment like that and think that a pullback is probably due here. It's something bigger than what we saw earlier this week. She says a 10% pullback wouldn't be all that uncommon after a run-up like this.
A 10% pullback, you think about what that looks like in a name like NVIDIA, it's just a blip. One thing that's interesting here is the NASDAQ Composite and the NASDAQ 100 setting record highs in terms of intraday levels, but volume in the NASDAQ lower than the 20-day average.
What I also think, though, is if we get a 10% correction, that I feel like in some ways that would be a miracle. You take a look at the weaker dollar, Romaine, I wonder if that's just fuel to the equity fire.
Yeah, I mean, the question, though, is sort of what would drive a 10% correction. I mean, it would have to be a significant breakdown in corporate earnings or in economic conditions. I mean, whether we get a pullback or not, I don't know. Maybe we got that pullback on Monday and Tuesday. At least for right now here, investors seem to like what they see. A nice bid to stocks pretty much all across the board. The Dow Jones Industrial Average up by 130 points or 0.3%. The S&P 500 higher by about 50 points or 1%, while the NASDAQ is going to close up by 240 points or 1.5%, and the Russell 2000 getting in on the action as well with a 17-point jump, about 0.8%.
All right, to the S&P 500, folks, 367 names gaining ground on this Thursday, 136 Scarlett to the downside.
Yeah, you look at the sector breakdown. Let's pull up the IMAP. A lot of green there with tech and communication services, each gaining at least 1.8%. In fact, all Magnificent Seven members are higher, led by NVIDIA. Materials also getting a boost, up 1.2%. Freeport-McMoRan is the big winner there. Your laggards, there are two sectors that finish in the red, and they are the financials and the real estate investment trusts.
All right, guys, let's get to some of the individual gainers, if I may, on this Thursday. New York Community Bancorp continuing.